Finally, I followed your excellent example. Okay, we are going to talk about how successful fintechs are scaling up with StartPath. And to do that, we have Victor Zeng from MX51, Simone Joyce from Paper Plane, Claire Rhodes from Identity, and Shannon Scott from Air Wallets. Your moderator for this panel is Cullen Hogan from MasterCard. Guys, cheer, yell, clap, bring it home. Let's go. Over to you, Cullen.
Thanks, Simon. I hope everyone's enjoying Intersekt as much as myself. It's fantastic to catch up with so many awesome people face to face after the last couple of years. Certainly don't take that for granted. I'm really excited about today's session. I'm joined by four absolute rock stars of the Australian fintech community. Simone, co-founder and CEO of Paper Plane. Victor, co-founder and CEO of MX51. Claire, head of sales and marketing for ASX-listed Identity. And Shannon, global chief product officer for Australian unicorn Air Wallets. Welcome, everyone. Before we kick into hearing their personal stories and stories for their company, I just want to step back and explain what StartPath is. StartPath is MasterCard's global FinTech accelerator program. It was voted by the International Chamber of Commerce as the world's best accelerator program last year. We get about 1,600 applications per annum. It's a global program, as I mentioned, of which we accept about 30 companies into the program. So it's a very prestigious program. It was actually invented by our Chief Innovation Officer who came into MasterCard. We acquired his virtual card technology company. So it's a product created by entrepreneurs for entrepreneurs. So now I'm going to hand over to the group. Now, if you could just do a bit of a speed round here, starting with yourself, Simone, on what was the step or steps to Paper Plane and MX51, Identity and Air Wallets scaling out of Australia into Australia?
Thank you, Cullen. And I actually didn't know some of those things about StartPath, so thank you. That was really interesting. What were the steps that we took to scale in Australia and then out of Australia? So we really took a very specific focus on problems within the Australian market, and we're really quite focused on that. And because we were so focused on that particular problem, things started to come into the orbit of that problem that we realised were contributing to it. So we kind of, like a balloon, we sort of grew and grew and grew, and then we found the exact right fit with all of those different pieces to go ahead and solve the problem. Then looking at a global scale out perspective, we were really scanning to see what was aligned with the way that we solved the problem in Australia and what was aligned with the factors that were causing that problem. And that's where we're up to now, and I can talk about how MasterCard comes into that in a little bit.
Great. Victor?
Yeah, so a little bit about MX51. So we're a payments as a service platform. We really focus on the front end of payments where commerce and payments intersect. It's been a bit of a journey for us. It's been over 5 years, and actually the idea started off when I was inside Westpac Group, and we looked at what were some of the pain points for merchants at the front end of payments. How do you help them save time, grow their business? And so that's sort of where it happened. And we looked at, when I was in the bank, we looked outwards and said, who are doing this really well? And it was a bunch of people like Stripe, Adyen, Square, Tyro in Australia. And we really looked at, well, how do we provide this capability as a white label to banks and acquirers? So that's where we started. We started off life with one major bank customer, and now we're working with many banks and acquirers, still in Australia, and looking at scale maybe next year internationally.
Thanks, Victor. Claire?
Hi, everyone. I'm Claire Rhodes. As Cullen said, I work with Identity. We've taken a bit of a different journey, I think, than some of the other companies here, in that we started with customers internationally and then moved our focus back into Australia. So our business started with the idea that sharing transaction information between counterparties or to regulators and regulated entities is quite difficult. And so we built a data platform that made that easier and automated some of those processes. And so, one of our first customers was HSBC, and we've got a couple of different products in market that's all based around the idea of securely sharing information. What we're doing today is focusing on helping automate reporting to AUSTRAC. So it's taking that data platform idea. And I guess our journey really has been about how we listen to customers and how we listen to the market and how we take the original ideas for the business and apply that to the customer problems and the biggest pain points that we're seeing at the moment. I'd been with the business for about 4 years, and I joined just as we IPO'd, but I think that's probably a journey discussion for another day.
Thanks. Hi, everyone. I'm Shannon from Airwallex. For those who don't know Airwallex, we provide financial services to businesses wanting to operate globally. So if you're an Australian business, you want to pay suppliers in the United States, you have customers in Europe or in Hong Kong, we make it really easy to send funds in USD, to create a bank account number in Europe so you can easily receive euros, or to receive payments online, you can use the local payment method of Hong Kong, for example. With StartPath, it was actually, we were selected in 2016, but today we're now actually a $5.5 billion unicorn. We have 1,200 staff across 19 different locations around the world. And the sort of founder story is quite interesting. Our founders actually had their own small business, and they recognized the challenges of making purchases internationally. The high FX costs, the slow turnaround times, and they wanted to not just solve that for themselves, but other startups and businesses wanting to operate globally. And so it's really just compounding from there as we try and look to more ways to support businesses operating globally.
Thanks, Shannon. Now, when I attend these panels, actually the best things that I've learned is when, great leaders talk about the things they do differently. Actually, it's easy to talk about successes, but Simone, is there one thing that you do differently or that you counsel someone in your kind of journey in scaling up to the audience?
Is there one thing we do differently? That's a really interesting question, and it is a question that I get asked quite a bit. And I always think back and think, oh, if we hadn't had done that, maybe we could have avoided that, but then we wouldn't have learned about that thing. So I feel like scaling up there are some things that you can identify as, oh, that's very common and this is where you get to with this point, but you really have to walk that journey yourself, and you really have to make the mistakes along the way in order to learn the next thing. And I would hate to think about what would happen if I took out some of that experience. There would be a vacuum that maybe would have been filled in a different way. So I don't think I'd change anything. I think you just really have to focus and take the experience that comes and make the best of it.
Very wise words. Victor, we've worked closely together the last couple of years. You've got a Big Four banking background. When you came into MX51 and joined StartPath, what were you hoping to get out of the program?
Yeah, look, it's a great program actually, and I was first introduced to StartPath when I was in New York, and I visited the Innovation Lab at Mastercard, and they introduced the program, and we were really excited because for MX51, our target customers are banks, acquirers, and PSPs, and if you look at Mastercard's acceptance business, that's who they target, right? So we thought the program would be really great for us to hone in on the areas that we need to focus on through the program, and then from day one, our intention was also to build a strategic partnership with Mastercard, because when you look at what Mastercard offers in their acceptance business, it's a really good fit, complementary fit with the products that MX51 has, which is complementary to the gateway services for Mastercard, right? So we really use that opportunity actually to also build a relationship commercially, as well as going through the program.
Thanks, Victor. Claire, as mentioned, you head up sales and marketing for an ASX-listed company that scaled into Australia. What learnings do you have from the Accelerator program?
Well, I think the first thing that we learnt was that it was fun. This was back in 2018 when we did StartPath, and one of my colleagues who's here today ended up in Miami presenting to the Pitch Fest, and so I think that was, a benefit of pre-COVID times. I think the things for us were really about getting access into organisations that we wouldn't have access into otherwise. So, the things that StartPath did for us, and I'd bucket into three areas were, I guess, access, intros, and expertise. So, it's invaluable to have that insight as you're scaling up and you're a starting up business, with the customer insights that you get from talking to people like the Mastercard team. And they also introduced us to a number of the banks in their network and a lot of the other people within Mastercard. So there was kind of access across the Mastercard board, and then introductions to organisations who could become our customers or could help us on that product development journey. And I think that, those three things when you're at that stage of business really are invaluable. And I don't think we would have had the access to those organisations as quickly as we could have by going through the Start Path program.
Thanks, Claire. And next time you're going to Miami, please invite me. Shannon, you're the Global Chief Product Officer for Airwallex, phenomenal success, as you've mentioned. What's the secret to your global expansion? Other people in the audience can kind of learn. What are the kind of 1-2 things that Airwallex really holds close in their expansion model?
Yeah, so I think Airwallex is actually a really aggressive company. We want to move quickly, and we're always thinking about, like what's the next region to move into, what's the next sort of like extension of the product we can take, and I guess the driving function is really about the customer needs. I think we're there to support our customers go global, and they have a long list of demands that we can support them with, and so we're sort of hungry to support that and really enable them. We've sort of grown to 50 different partnerships around the world. So when you think about like StartPath and as a Melbourne-based company that was very small in 2016, having access to working with like global platform companies like MasterCard, you really like sort of it smooths the gears for accessing those partnerships. Now, of course, going back to those user needs, I think as you expand into each region, it's very complex. You've got regulatory requirements, you've got sort of incumbent like banking services that have operated very domestic centric models, and I think this is what's required us to sort of have like 19 different locations around the world with our employees. It's a very complex space to grow across these different markets, but I think we want to abstract that complexity away from the user. We want them to just be able to focus on their business and not have to worry about these complexities. So while it's a lot of work, we really believe it's worth the effort, and it's being rewarded through that customer engagement.
Yeah, great. Simone, back to you. At what point of your company's journey did you say, okay, maybe an accelerator program is the right point in time?
Well, that was back in 2018 when we applied to StartPath and did not get in.
Oops.
We did. It was
Next question.
no. It was good. It was good that we didn't get in because I don't think we would have got the same value out of it at that point of our journey. We were very early. We were operating under a completely different business model at the time, and we were in our really, early formation phase. What MasterCard did do is say, well, you can't come to StartPath, but come along to Money 2020. It was in Amsterdam. And just have a look around and see what else is around. And so that was actually really helpful in itself to kind of pull our head up out of the Australian market and do a nice scan around what was happening in Europe at the time. And that was partway onto the journey where I decided Europe's not the right market for what we're doing. So we sort of turned and came back to Australia and then really focused on what we were doing here. So then reapplied to StartPath last year and got in, which was very exciting, and it was a much more appropriate time for us to go through that journey. We were really targeting the right customers for our product, which is like MX51, banks and large enterprise who have a need to rapidly evolve their core systems to be appropriate for the changing world of payments and the changing needs of businesses and consumers. And MasterCard was a really good choice for us at that time, particularly because we're thinking about what happens in the next couple of years where we are really quite mature in the Australian market. What's next? And MasterCard's a very good partner to help us with that what's next step as well.
Great. The obligatory COVID question, Victor. So you were on the program in 2020, right in the epicenter of lockdowns. What was it like running a company and being on an accelerator program in 2020?
Yeah, like at the beginning of 2020, we were actually kicking off a fundraising round, and within 3 months, everything closed. And it was really tough actually because we basically had to cut within 3 weeks of the first lockdown. We had to cut 40% of staff, and that's not unique to MX51. A lot of startups had to do that, but it was a really tough period. And in fact, a StartPath was really an awesome thing for the organization because we looked at, after you cut 40% staff, the next question is how do you keep the rest of the people motivated and moving forward? And StartPath was great to go through that program because it sort of gave people a bit of hope and everyone was excited. That was a global program, and that we were selected, among a small group from a very large group. So that was really, really good, actually. And during COVID, I think also the world just slowed down, right? And things have slowed down. It really allowed us to focus on StartPath. And even though it was over Zoom and it wasn't in person, but still we put a lot more effort and focus into that. And we got a lot out of it. So it was a great experience for us.
The time differences was a killer though,
Oh,
right?
it was a killer. Oh my goodness, it was a killer actually. Trying to get companies from all around the world together. And so I think I remember most of the sessions were like, started off at like 9 in the evening, went through to early morning.
My Zoom background had a Miami background just because you couldn't go there. So, Claire, identity was part of the program in 2018. How has the last sort of 4 years been, as part of the alumni and coming off the program?
It's been a great journey for us. I talked a little bit before about the access into MasterCard and also to MasterCard's network that we got from being on the program. And I think, I don't know whether this is everybody's journey, but because we had that access into MasterCard and we were learning so much from the team about how the business worked, it helped us on our product journey, and it actually ended up with the MasterCard cross-border services team becoming one of our early adopter customers. And so I think, our relationship with MasterCard has changed, obviously. MasterCard is now, as I said, one of our customers, but we continue to get that support from the StartPath team as well in terms of how we're moving forward and talking about it. And, we love doing things like this to support the StartPath program because we just got a lot out of it. It really helped us on our journey of product discovery as we looked at, what MasterCard's using our platform for, and then how that moves forward to what we're doing today with the AUSTRAC reporting. So it's been a great journey and a good relationship, and we'll sing its praises. So.
And Lily and Naresh really wish they were here as well, to be honest. We almost got them out. So, Shannon, so Airwallex, as you mentioned, started right here in Melbourne. It's a phenomenally successful company. What piece of advice would you give to the audience about, scaling up?
Yeah, I think obviously, Airwallex being a global company, we're always thinking about sort of, how do we sort of scale globally, and there's a lot of new features, not just sort of bringing the same product into new regions, but thinking about new products as we go along. I really still think that the getting into sort of the understanding your user and really what they are looking for, what their circumstances are in their given region is one of the most important things. So I think you need to be a bit careful about how quickly you scale to make sure that you're staying relevant to your users, but and sort of really understand the next market you're going into. But overall, I think there is a lot of the emergence of fintech and just the amount of different companies that are coming forward. We're all riding this tremendous wave, and globally, business is becoming more and more homogeneous, right? There are platforms that can support us, whether it be in logistics, whether it be in sort of like cloud service providers, advertising services. They're increasingly global, and I think that's true for companies like Airwallex as well. Like I talked earlier about our business accounts. We also had a lot of success in our platform offering, helping other fintechs actually deploy their services into other countries. So, for example, maybe you're an expenses, like an employee expense product in America. You want to scale into Australia or to Southeast Asia. We actually have those fintech partners using our platform to provide their services or like our combined services to their customers. And I think companies like Airwallex are here to sort of help you on that journey too. And I think there are also platforms like MasterCard that are also global and can sort of create that homogeneity so you can scale.
Awesome, thank you. Last sort of speed round. You're all incredibly busy. You're like super athletes, right? You're running families, you're running companies, you business travel every week. Given how incredibly time poor you are, what's the really good things from an accelerator program that you're able to articulate? I don't know how, you have 30 seconds a day to think, make really smart, quick decisions. What makes that FinTech accelerator worthwhile given how busy you are?
I think using an accelerator program to get you information to make better quick decisions is a really helpful thing. I think making sure that you use it to connect to people that can help you not just now but in the future. And I think going into it with some clear goals about what you want to achieve through the program is really important as well, whether that is we want to learn X, Y, and Z, or we want to meet these people, and also not being afraid to ask more of the program than is on the packet, essentially. Being aligned with the accelerator program is really important as well. For us, MasterCard is aligned. I don't know if anyone follows MasterCard CEO Michael Maybach on LinkedIn, but he really makes some interesting positioning statements about MasterCard as a company. But then you can zoom out and go, oh, MasterCard's also got programs in Africa that are helping women, exchange funds so they don't have to have money hidden under their bed. All of those things align with our values, but also where we see how businesses manage money over time. That was a good thing for us. So we knew that we could go through that accelerator program with the right connections, with the open eyes about what we wanted to get out of it, and also have some really long-lasting and beneficial partnership opportunities as a result.
Great, thank you. Victor, same question.
Yeah, I think so. With StartPath, you get more than just the program, you get the organization as well. So you get access to a lot of experts who understands the payment space, understands how banks and acquirers work. And we find that really, really valuable as we fine-tune our value proposition and our pitch to banks, right? So I think that's really, really useful. And then just the relationships you build and the connections you get in other markets for the next stage for MX51, it's really invaluable.
For me, I guess there's a couple of learnings from our journey with accelerators. We've done a couple, and my advice would be choose the right one. They can become a distraction if you're not using them for the right purpose for your business. So if you're on a customer discovery journey or product market fit journey, then choose one that's going to help you to do that with the right customers. And I think using it for the right purposes, access, product market fit, make sure that it is the right one for you, and definitely don't let it become a distraction to the business.
Thanks. And coming from a product background, like I'm working very closely with the engineering team. I think we're just often we're in the basement, we're just churning out product, and we're just really focused on executing. And it's sort of very easy to get sort of fixated on all the things you need to build to sort of get to market or to go after the customers that you believe are the right set. I think these types of programs really bring like a broad set of perspectives and really sort of force you to sort of to think about these different mental models, different possible approaches that allow you to just take that step back from the execution, reevaluate sort of where you are, other points of view, and then back to work.
Great. I think I've actually got time for one more question, so I'm going to put them on the spot here. What's your prediction for 2023?
In general?
In general.
Okay.
General. Football teams winning premierships.
All right. Well, obviously.
Please not be Collingwood.
The Richmond Tigers are going to win the season next year. I just realised I'm wearing Richmond Tiger colours by accident. Okay, so I think that in Australia next year is going to it's been the subject of a lot of panels and a lot of discussions, pay to. 2023 is the year of pay to for this market, but I also think that we'll see economies like the US really start to crystallise in all of the turmoil that's happening this year. We'll see Fed Now go live, which is their real-time payments in 2023. I think Canada's starting to move towards that market, so I think we'll see a lot more focus on real-time account-to-account payments, not just in Australia, but differently in markets like North America.
Great. Victor, on the spot.
I actually missed your question, actually.
What's your prediction for 2023? Simone said that Richmond's going to win the flag, as well as pay too. So,
well, maybe I'll stick to payments. So, no, I think for 2023, the complexity of payments is continuing to grow, right? So, merchants have to be able to accept different forms of payments, different channels, real-time cards, and so really you've got to solve for that pain point. And more merchants are looking for how do you solve for pain points around payments, right? With all that data, what can you do to help me with that data? How do you help me grow my business through insights, analytics, simplify reconciliation, a whole bunch of stuff, right? So, I think more of those things need to happen in 2023.
Great. Claire?
Aside from it being a raging success, is that just an answer I can do? Thinking about it from what we look at as a business, I think, you talked about complexity, Victor. There's a lot of complexity out there with new payment channels and new payment flows, new ways to move money, new currencies. I think we're going to continue to see that complexity challenge the industry for a while. If I think about it from the regulatory point of view and what regulators are doing to start to think about how they get their arms around all those things that are changing, I think that's going to be a bit of a challenge, not only for the regulators, but also for everyone in the industry just to get their arms around. So I guess my prediction is complexity before simplicity.
Agree. Shannon?
Thanks. I think it's actually been a really interesting time for startups, whether you're in technology or in fintech. Like if you look at the last 6 months and sort of like public and private valuations and how that's been affected, it really is causing an interesting challenge for a lot of tech companies. There's changes into sort of into liquidity and cash flow. I think the space is very hot. I think it continues to be very hot, and I think there are like really a ton of wonderful players out there. But we are going to see, I think, a lot of consolidation in a way that actually I think is like is healthy, a healthy sort of pruning for the industry. And what this will result in is, I think, like less froth. I think more thoughtful businesses that really have strong execution, strong planning, and really sort of innovative contributions to this space, and a lot more sort of partnerships, leveraging the platforms that actually are coming through in different countries, like the rapid payment methods, for example. I think we're going to see some really great things come out of that in 2023, and the players that do emerge are going to be really exciting.
Awesome. I want to thank the panel. Thanks for your generous time, your candid responses. Look forward to seeing you out in the breakout rooms. Thanks to the audience for attending. Hopefully you learned something from these amazing leaders in fintech, and look forward to seeing you out there. Thanks, everyone.
Thank you.
Thanks to Victor, Simone, Claire, Shannon, and of course, Callan for his fantastic hosting of that. Simone, I look forward to the defending premiers, the Sydney Swans, meeting Richmond in the final in 2023. I was lucky enough to be there in 2019 when the Tigers smashed GWS in an amazing game. Malcolm Pickett kicked his goal in front of us. It was just an amazing game and a masterclass. So all the best to the Tigers for next year. All right, guys, wander off if you're going. I know there's a great diversity panel with Trina Blair and others on in Mayfair. As much as I don't want to chase you away, I would recommend, if you are interested in that, to go and see that conversation coming up in the Mayfair room at the other end. We are going to turn our attention to SME attitudes and behaviours when it comes to managing finances. And I know from a discussion we had yesterday that financial literacy in SMEs is not particularly high. So this is going to be an interesting conversation. I'll give you a minute or two to settle in and we'll be right back. Come on in and settle down, everyone. Great to have your company for our next session. And it sounds like it's going to get a little bit fiery and feisty because, as Helen just pointed out, she's not moderating this panel. She's actually the mediator of it. We were going to get a UN rapporteur in to sort of sort this one out, but I'm sure Helen from MYOB will do a great job. Well, as I said, we are going to discuss SME attitudes and behaviours when it comes to managing finances. Of course, MYOB has a great insight on that and regularly puts out reports on it because I get them and read them, Helen. But we've got an excellent panel for this. We have Matthew Tyrrell from Kodat, Patrick Coughlin from Creditor Watch, and Matt Seck from Airwallex. Helen Lee from MYOB is your moderator and mediator. Ladies and gentlemen, please give them a big hand. Over to you guys.
Still good morning. Good morning. Yes, hello, I'm Helen Lee. I'm from the MYOB Executive, where we, of course, are focused on supporting small businesses across Australia and New Zealand and helping them to start, survive and succeed as a business management platform supporting a wide variety of their requirements. Been around quite a while, 31 years. I also have the privilege of serving as a non-executive director on the board of ASX-listed Button, where, of course, we're reinventing cash flows across business, working predominantly in a B2B context, servicing SMEs at the end of that chain. And joined today with a strong panel with, again, direct SME experience as well as via B2B connections. So I'll start with Matt Tyrrell. Matt is the commercial director at Kodat. Kodat describe themselves as the universal API, enabling access to consented business data from customers across multiple platforms, accounting, commerce, and banking. Matt has a long-term career in the finance sector. He founded Currency View in 2015, automating cross-border accounts payable and FX hedging. They were acquired by World First in 2019, and Matt worked with them out of the UK before returning to Australia with Kodak. So welcome, Matt. Thank you for the time. Next to Matt is the other Matt. So that's Matt Tyrrell. This is Matt Sept. So I'm going to call them TNS, I think, for the rest of the morning. And Matt is the Director of Revenue and Product Strategy at Airwallex. So again, sporting the Airwallex t-shirt. They're all in uniform through the course of these 2 days. Airwallex provides global financial infrastructure and applications to empower businesses of all sizes to operate anywhere, to grow without borders. And Matt leads the strategy and analytics team in ANZ, focused on executing the global product roadmaps and the effective monetization of those products. Before this, he was in the corporate strategy team at Sept, with a background in management consulting and small business ownership himself, so brings some unique insights through that. Welcome, Matt. And last but not least, on my left is Patrick. Patrick is the CEO, Patrick Coughlin is the CEO and one of the founding employees at Creditor Watch. That's a commercial credit reporting bureau with over 50,000 customers, from sole traders right through to ASX-listed companies. Creditor Watch combines multi-source data to inform a view on credit risk for their customers. And prior to his more than 12 years with Creditor Watch, Patrick was with One Wi-Fi and Dynamic Business, giving him an understanding and an empathy for the SMB sector, which he also now applies as a member of the ASIC Business Advisory Panel. So welcome, Patrick. So some diverse experience for us to draw on in the discussion this morning. Now, as already mentioned, MYOB loves to research our SME customer base. We do that on a regular basis with very specific quarterly reporting. And interestingly, our June Business Monitor data showed an almost entirely balanced perspective amongst SMEs on their assumptions and their opinions of what's going to happen economically through the remainder of the year and into the next 12 months. 41% of them are anticipating improvement and 37% are anticipating a decline. So they're almost entirely split on sentiment, with a good chunk of them sitting on the fence in the middle. So I'll start with a question about that, because I think sentiment drives behaviour. It drives confidence or lack of confidence, which particularly for small businesses then, of course, informs the behaviour and the choices that they may make around investment. So perhaps for you, Matt S., we'll begin with a quick sense check on what are you hearing from customers? How would you interpret their sentiment? How's that showing up in the behaviours you're observing?
Great question. I guess, I mean, we're all pretty well aware on the current sort of macroeconomic sort of environment challenges that sort of poses with interest rate inflation sort of rising. But I think when we speak to SME customers, I think we get a huge sense of optimism in a way. And we ran a recent survey, for example, where I think we found that close to 69% of SME businesses are actually thinking about expanding their business overseas, right? And that's a massive sort of percentage. Obviously, only about, I think, 35% of them are doing it today, which means that the remaining 35% or so are thinking about making that step in the next couple of years, and that be sort of expanding to overseas customers or be to sort of expand the kind of employee base or offshore some parts of their operations. And I think that sort of speaks to a tremendous sort of optimism in terms of sort of beyond the current sort of macroeconomic challenges. A lot of businesses are still thinking about how do I thrive and how do I sort of grow my business within this environment itself.
So there's hope. They're hopeful, and I think importantly, looking and exploring that top line opportunity as well. Then, Patrick, you have a very particular lens on that as well. You have deep insights into some of those dynamics.
Yeah, we get some really good insights from small businesses, and there's optimism there. They're very positive, and I think despite the obvious macroeconomic headwinds, a lot of media attention around those headwinds as well. Not to say it's misplaced, but the general feeling is rising interest rates, inflation, supply chain, and labor shortages. They can't be worse than full blown lockdowns, on and off for 2 years. So there's a general sense that there's been investment in technology, efficiency gains, and becoming a lot more streamlined, removing friction from their businesses through those really hard 2.5 years, that they're now well positioned to deal with these new problems that they're facing.
So they are new problems, but in some way probably emotionally a little lighter, or they're more, a cognitive business challenge to solve.
That's right.
Rather than I'm stuck.
If you are operating a hospitality business, the fact that you can open your doors and have people come into your cafe or your restaurant is a huge win.
Yeah.
You're running a manufacturing or processing business, not having to worry about shutting down for 5 or 7 days or 14 days because one person was exposed to COVID. They can get on with actually running their businesses nowadays.
Yeah, there's a theme in there around certainty for small
Certainty
business.
is that key word.
Yeah,
Yeah.
without a doubt. Matt, your engagement is typically more in a B2B context rather than direct into SMEs. But what have you seen in terms of those digital uptake patterns that Patrick's just referenced there over the past couple of years? And what does that, indicate for you?
Yeah, so I think we're seeing. You're right. Thanks. We're a B2B business. Our customers are typically banks and fintechs, and we sit as an integration layer between them and their SME customers. I guess what we're seeing, in the research we've seen, is that these SMEs are relying much more heavily now on their software. They're sort of leaning into it. They're looking for cost savings. They're looking to streamline operations. In an environment where margins are eroding, the wider, I guess, skills shortage as well is really driving a focus for these SMEs to be automating processes as well. And for fintechs, that's an amazing opportunity in Australia.
So efficiency is a really key thematic.
Yeah, definitely.
Yeah. So our business monitor data, the MYOB business monitor data manages reviews particularly the key concerns, things that are on the minds of SMEs consistently over time. And with the exception of a really significant spike in fuel prices in the January report, that's settled down ever so slightly after the back of that shock, we tend to see this really consistent interplay that we see again at the moment, where it really cash flow is key. So cash is king, it always is, but cash flow is absolutely key. And so managing the increased cost pressures of fuel, utilities, supply chain variables alongside effective pricing, and then thinking about how they're going to drive profitability is the absolute current juggling act. How much of that pricing can you pass on? How much of that do you have to absorb after the last couple of years that they've been facing? So let's perhaps talk a little more and dig into this whole question of costs, because if you're thinking about being efficient, there's some very significant behavioural choices or business tactical choices that SMEs have had to and continuing to make. So Matt, where are you seeing the main focus in these areas of cost and expense management? How's that playing out?
Yeah, I think step one in that sort of cost management process is actually getting visibility on costs, right? And at least what we're seeing, because we offer some of these expense management solutions in market, is that we're seeing this trend of consolidating sort of banking providers and corporate card providers, for example. So moving to get more transparency, more real-time visibility over business finances. So we're seeing SMEs stepping away from, say, out-of-pocket expenses from employees, which often sort of there's zero visibility on that. Employee could go on a business trip. They don't build a company for 2 months. You don't know how much has been kind of spent. To using sort of like products and services like ours, and there are a number of sort of other providers in the market as well, which provide these types of real-time sort of visibility, and that's step one on that. And then obviously step two is sort of consolidating sort of the number of tools and solutions you use. One, obviously, by consolidating that, you kind of cut costs on the tech side of things, but also more importantly, instead of having 3 separate sort of credit card statements, you're seeing it all in one place. And getting that is probably quite key, and we're seeing a lot of that step being kind of taken now by a lot of SMEs in Australia.
So that's interesting. So not just the visibility and the liveness, not a good English word, but the liveness of that data, the real-timeness of that data, I'm assuming then requires from them more active management of that day-to-day as well. So they're in the data more frequently.
Yeah, they're in data more frequently. They're sort of crafting policies and things around that. And also, I mean, beyond just managing sort of, I guess, cash, it really depends on the nature of the business that they're operating in. Obviously, in the service industry, for example, where businesses rely a lot on headcount and seeing that sort of churn and stuff is increasingly sort of challenging. And so how do you sort of, how do SMEs sort of think about that balance between sort of wage growth and just pushing it out to retain, to attract and retain talent versus sort of matching that cost? I think that's quite an interesting challenge that we're seeing sort of SMEs being faced with.
Yep. We often worry that SME owners can spend more time in the business than on the business, and thinking about the dynamics of how to improve the business going forwards. This is definitely one of those moments where you're having to pay attention to what's happening. And so this consolidation theme is an interesting one. Where are there multiplication of subscriptions? Where are there multiplication of fees? Where are those little 1%ers that when you add them together can bring saving? Matt, you've also spoken to these efficiencies, these cost savings that SMEs are looking to drive or potentially using digital tools to facilitate. Is there anything you'd add?
I mean, we're an integrations company, so it's probably no surprise that we see integrations as being more and more of a focus and decision making for SMEs. ERP, accounting, payroll, expense management, point of sale payments. These are the core functions of SME business operations, and I think there's a stat out there that says the average Xero or MIB user has about 12 different apps that sit, I don't know if it's 12, whatever it is, but it's that are sitting outside of their accounting platform or ERP system. So they increasingly want to see these all sort of working together. And I think, to be honest with you, I don't think a lot of business users and business owners are really spending that much time in the accounting platform. They're spending their time in, the expense management system of Airwallex or wherever it would be. And they just expect those things to be seamlessly talking to each other.
Yeah, there's a lot in there that really resonates for us, without a doubt. This thematic of disconnection, how you can ensure that the pieces of the puzzle work in a really efficient, integrated way is certainly something on our minds as we think about our customers and how we support them, without a doubt. But also that there are only so many core workflows in a business and you want them working really, really smoothly. So pay attention to that. Yeah. And I suppose when it goes wrong, Patrick, you have a really good lens into seeing that, being able to give a predictive eye to when business is tracking well, where things are going wrong. What are the patterns that you're seeing?
Yeah, so we run a monthly business risk index, which gives us really good insights just into general risk within the economy, specifically around insolvency and probability of default, and how companies are paying their bills, how industries are paying their bills, even down to almost a suburb or a local government area visibility, which is really exciting. And I think what we're seeing is there's certainly, despite the optimism that I spoke about earlier, there's certainly a lot of negative data coming through around pressures on business and an increase in credit risk and slowing payment times as well. But I think we also have to remember that we're coming off this really, really upside down world where through COVID, despite the fact that companies should have been going into administration and insolvency more than ever, the numbers dropped 50%, and we're still making our way back to pre-COVID insolvency numbers, which we're very close to. But despite the fact that it's increasing, it's back to almost the normal sort of cadence of insolvencies, which is good. I think there are obvious sector challenges like hospitality, construction's been spoken a lot in the media, and there's been some really high-profile collapses. But at the other end of the spectrum, there's some industries that are doing exceptionally well, like agriculture, health, for obvious reasons, and also manufacturing. It wasn't that long ago that manufacturing was dead in Australia, and all of a sudden it's performing really nicely. So I think it's important. It's very easy to generalize and say, insolvencies are going up. I think what's really important is to understand where they're going up, and that's both from a geo location perspective, but also from an industry perspective as well.
Certainly some of the macro variables have changed the dynamics. As you said there, local supply chain demand impacting on the strength of manufacturing and so on. I think you said when we were speaking last that construction was perhaps getting a slightly unfair rap in the media.
Yeah, look, I certainly do think they get a lot more attention than other industries, and construction's one of those industries that's always probably top 3 riskiest industries in Australia, because they operate on such low margins. Even the largest ones are operating on 1-2% margins, which is crazy. So when a $100 million or a $1 billion project goes wrong, it goes really wrong, and ultimately the construction company struggles to survive. And there's also this issue around fixed price contracts. Right. I do think that it is a really robust industry. It is really big as well, and that the whole economy, anything linked to property in Australia, we know that the whole economy is, reliant on that. So I think they will be okay, but they're certainly, facing some really, really tough conditions at the moment. What we typically see is that despite that they're the slowest paying industry in our payment rating insights and data, that doesn't necessarily translate to them being the riskiest industry at the moment.
Very loath to digitise, challenging to get construction to digitise. 85,000 construction SMEs with no to very little digital capability. I was having a conversation recently with a politician about why, simple things like invoicing capability or payments capability was something that someone who had just done the tiling in his bathroom could benefit from. And there's an assumption that being on the tools means that there's no opportunity to improve your business, and that's definitely rich. Patrick, just a question without notice for us to come back to at the end. Everybody in the room now wants to know the slowest or worst paying postcode in the country, so we will come back to that. Yeah. Matt, you also, you mentioned sectoral differences, but you definitely see sectoral differences in take-up and patterns. What stands out for you at the moment in terms of sentiment and behavioural patterns?
Yeah, I think we deal a lot with, or one of our biggest sort of sectors is professional services. So, anyone from an accounting business all the way to like a marketing agency to sort of consulting businesses, and what we're seeing in these businesses is that all of them are struggling with one thing, which is hiring and recruiting talent. And the obvious sort of pathway that a lot of these businesses are taking are increasing salaries, but we're seeing a lot of creativity in that, where more and more businesses are starting to think about sort of employer perks in the way that they offer it to the employees. So instead of just increasing someone's salary by say $3,000, these businesses are thinking about how can I pass on a benefit of an equivalent value. Say, we'll pay for your gym membership, we'll pay for mental health sort of like courses or subscriptions, and that does sort of two things to the employee, right? One is if you just blatantly give a $3,000 increase to an employee, I think employees just say, I've done well. This is what I deserve. But giving sort of a $600 sort of $1,000 sort of gym membership, I think reinforces one, the employer's sort of focus on mental health and well-being, and then secondly, obviously employees talk about these things, right? To their friends, to their families, like, hey, I'm going to gym for free, and a lot of these SMEs are looking for, obviously offering these perks come with whole bunch of sort of implications, fringe benefit tax and all that, and they're looking for one sort of like advisory support to implement these solutions, and then secondly more a tech enabled way of doing it. Obviously, paying for 50 employees, 100 employees, invoices is going to be complex. So looking for like providers like us to kind of issue kind of corporate cards and empower that. And so we're starting to see sort of the role of what we offer to businesses evolving over time. We're not just solving kind of traditional finance problems. We're now moving from solving a finance problem to solving almost like a HR talent and recruiting sort of problem within some of these organizations.
I think that's really interesting, and the challenge for SMEs often is how to build, an employee proposition, because they don't have the scale. They don't have the scale of big businesses to, bulk discount deals on propositions or so on. So that's a creative way for them to be thinking. And full disclosure, obviously we partner with an organisation called Flair, which is also about how are you giving SMEs access to those benefits to help them differentiate. So I think there is certainly something in the SME mindset around how I'm really gluing employees to the organisation in a way that I perhaps haven't had to in the past with different employment dynamics. But it's all a form of investment. So we've spoken about costs and we've spoken about efficiency, but investment requires clarity, as we said at the beginning a little earlier. We saw at the beginning of the year in our health index that SMEs really entered the year strong balance sheets. People had held off spending, or they hadn't been able to spend in some instances. JobKeeper buoyed things up a little. And so they were sitting balance sheet rich. But capital was a lot easier to access 9 months ago than it is today, and some of those dynamics have certainly changed. So what are you seeing around investment and access to cash, access to lending?
Yeah, so I mean, there's no surprise that there's been this significant downturn in capital markets, particularly for technology businesses. And I think any technology business that's trying to raise at the moment or has to raise in the next 12 months would certainly be feeling a lot more nervous than they were even 3 or 4 months ago. So I think that's going to be a big challenge. And the other challenge is for underwriters and fintechs is now changing the way they actually underwrite those type of businesses as well and support them or fund them. So starting to really have to look at getting back to the fundamentals of risk underwriting, but also utilizing as much data and insights, not just on that business, but for example, on the customers of that business. So that second layer of data. So you've got your customer and then your customer's debtors, that becomes even more important. And when you're doing that at scale comes, technology and the need to automate it as much as possible. So certainly plenty of challenges out there for businesses that don't have a clear path to profitability and are burning cash. And we've seen that obviously reported on, plenty of redundancies, unfortunately, in the mix.
Yeah. I think one of the things we spoke to last time as well was around just the clarity of my access to lending or cash. Like, give me an answer, even if it's a no, just let me know fast.
Yeah, that's right. The feedback we get is, if you're going to say no, don't say no in 6 weeks or 8 weeks. Say no in 3.5 minutes.
Yeah.
That's fine. I don't want to be burning cash for another 8 weeks waiting. And I think that's where the huge amount of opportunity is for organizations at Intersekt is, the big banks, that they're investing a lot in technology and automation and speed, but it's at the end of the day, it's not enough. Small business owners are crying out for quick decisions, and with the adoption of e-commerce over the last 2 years and how quickly that's been brought forward and the adoption of that, there's an expectation now that has to happen in other industries, and finance is certainly one of those.
Yep. Matt, do you have any perspectives on this one?
I mean, I think there's the digital lending, the fintech space that is, when you talk about access to capital for SMEs, I think there is still there's a lot of choice out there. We speak to a lot of banks, tier 2 banks, regional banks, and they're starting to really, they've seen the success of these fintechs, and they're starting to look into SME lending and commercial lending. There's a lot of platforms like Encino and loan origination, Sandstone technology that are enabling these banks, these smaller banks that traditionally have always been focused on mortgages, on retail mortgages, to move into this space. So I think in terms of just the actual choice, I think it's going to get wider and wider.
So the landscape is rich and full with opportunity, but just as a last question for each of you, how are SMEs even engaging with this audience of participants? What are their attitudes, and are they willing to step in and give this a crack when you think about their readiness?
I mean, from our perspective, what we're seeing in the US and the UK markets, we work with some of the largest fintechs in the world. The likes of Brex and Jeeves. I think probably the key trends that we're seeing is in expense management. These are some of the fintechs with the largest valuations in the world, and they're in expense management. So no surprise that Airwallex is really focusing and doubling down on that. And there's also a lot of other sort of homegrown expense management businesses like DiviPay, Cape, Patron that are also focusing on this. I think probably one of the sort of the opportunities is in revenue-based lending. Some of our biggest customers, our highest growth customers, are in that revenue-based lending. They're looking at sales data, they're looking at different types of data, whether or not it's commerce and point of sale, to make sort of more decisions on live data. That's where I think the opportunities are.
So you think that the trends of Europe and America will potentially flow here, and we'll have the SMEs starting to interact with this more?
I think so, yeah.
That's right. Matt, what are your thoughts?
Yeah, I think obviously a lot of fintechs are going hard after the SME segment. Very lucrative sort of segment, biggest sort of market potential. But I think when it comes to finances, I think it's obviously a very dry sort of topic in a lot of cases. SMEs approach banks for one of a few reasons, right? I need money, or I need to solve a problem in my business, and I think the traditional sort of way of trying to pitch sort of like solutions to SMEs just don't work, right? And we've tried, going to SMEs and say, hey, we can give you, an expense management tool. They're like, yep, this is probably number 55 on my list of things to worry about. Number one is sort of cash flow. Number two is sort of like, how do I retain my employees? And so really having that deep insight into what are the top 3 challenges that these SMEs are facing, and where we're finding a lot of successes is how do we kind of bring together a solution, whether it's ourselves or whether we bring together a group of partners to kind of help solve that pain point. Hey, you're bleeding staff. Here's how our solution can kind of help you with that. I think that creative sort of narrative is going to be what
relevance, right?
Yeah,
Real
yeah.
relevance.
How you get that cut through to some of these SMEs and encourage sort of folks here who are in that sort of SME sort of sector, who are targeting the SME sector, to sort of think about that sort of problem space.
Yeah,
a little
thanks.
bit more.
And you were saying at the right time, so relevant and timely there, Patrick.
Yeah,
Your thoughts?
they're in the weeds, as you said. They're working in the business. So when can you hit them at the right time? I think embedded finance becomes more and more important. And you guys are at the sort of forefront of that.
Music to my ears. Absolutely. Okay, so just before we close, that postcode.
Yeah, so I'll give areas so that probably no surprise. The first one is Western Sydney. They really haven't recovered from those extensive lockdowns last year. And the second, or equally as bad, is the Gold Coast Coolangatta area. The domestic tourism isn't enough to sort of replace international tourism. Plus, there's huge cost challenges up there, commercial and consumer property prices and leases and whatnot. So really challenging times. But at the other end of the spectrum, the good ones, the wheat belt, ag sort of centres, regional centres are doing extremely well. And then for those playing sort of city versus city, Brisbane, Melbourne, Sydney, Adelaide, Perth in the worst order. So Brisbane being the struggling CBD.
Right.
Yep.
Okay. So
And
out
Perth being the
west is
best.
going well.
Not a surprise, I guess.
Yeah, well. All right. Well, thank you, gentlemen. It was super to hear those perspectives, and I really appreciate that I could moderate rather than mediate this discussion. Thank you.
Thank you to the two Matts, to Patrick, and of course to Helen. I have to say, at Startup Daily, I talked to some great construction tech companies, prop tech companies. It is coming. It is going to happen, and it's now just about adoption because there are some great founders doing some good things in that sector. Well, guess what, people? You've been a great audience and you've earned lunch. So we're going to break for an hour. We'll come back in at 1 o'clock. Dom Pym will be amongst one of our panelists. We're going to talk about the role of fintech in helping broader business. We'll see you at 1.